In today's video, we break down one big question many Ethiopians are asking right now. What will happen to the dollar price in 2026, and how will it affect the Ethiopian birr? Welcome to Horn Business Insights, your home for economic updates, analysis, and simple explanations you can trust. The exchange rate in Ethiopia has been rising almost every week. Today, both the official and parallel markets are moving upward, and people are worried. Why? Because Ethiopia is facing one of the biggest foreign currency shortages in years. This shortage creates pressure, and when pressure builds, the dollar climbs, and the birr falls. There are several major reasons behind the continuous rise. First, low supply of US dollars. Ethiopia doesn't earn enough dollars through exports, tourism, or investment. Demand is higher than supply, so the dollar becomes expensive. Second, high inflation. Prices inside the country keep rising. A weaker birr means the dollar becomes stronger. Third, more imports than exports. Fuel, medicine, wheat, machinery, all need dollars. Importing more than exporting creates currency imbalance. Fourth, debt pressure. Ethiopia must pay large debts in foreign currency. This increases the need for dollars. And finally, political instability. Whenever security or political tensions rise, investors stay away. Less investment means fewer dollars entering the economy. Forecasts from multiple financial models give us a general picture. $1 could reach between 170 and 190 birr in 2026. Several models calculate around 180 birr as the midpoint. But the range can increase if inflation stays high or reforms slow down. This means the birr may continue to lose value, unless, of course, serious economic reforms happen. So, here are the risks that could push the 2026 exchange rate even higher. First, rising inflation. If prices keep going up at the current speed, the birr will weaken even faster. Next, if there are no major economic reforms, and the government just sticks to the same policies, well, the currency will probably stay under pressure. Also, increased black market activity is a big factor. When the parallel market grows, it tends to pull the official rate upward. And finally, ongoing conflicts. Any war or tension, creates economic uncertainty, and uncertainty usually makes the birr fall. There is still hope. If Ethiopia takes strong actions, the exchange rate can stabilize. Improving exports, like selling more coffee, gold, flowers, and livestock, means more dollars entering the economy. Attracting foreign investors is also key. If confidence returns, dollars will flow into the country again. Increasing tourism could help too, since a stable region can attract tourists and boost dollar inflow. And, a tight monetary policy, limiting money printing, can help protect the birr. If these steps succeed, the 2026 rate may be lower than expected. The year 2026 will be a critical economic period for Ethiopia. You should expect a higher exchange rate than today, prices of imported goods continuing to rise, and more pressure on businesses and households. There will be big reforms from the government to stabilize the economy. And most importantly, you should expect uncertainty. Exchange rates depend on many factors: politics, global trends, supply chains, and internal reforms. For Ethiopia, the lack of a seaport also adds pressure, because importing goods through neighboring countries makes trade more expensive and increases demand for dollars. Tensions or the possibility of conflict between Ethiopia and Eritrea can also weaken confidence in the economy, raising risk and pushing the birr down even faster. The 2026 dollar crisis is not just about numbers, it's about how Ethiopia manages its economy, its exports, and its future. At Horn Business Insights, we will continue bringing you clear economic explanations so you understand what's happening and how it affects your life. If you found this video helpful, make sure to like, share, and follow for more economic insights about Ethiopia and the Horn of Africa. Let me know in the comments, what do you think the dollar price will be in 2026?